All right, update number 30. So the account is down just over 1%. It's about 1.5% from last week. The markets in general were down earlier today. As you can see, the S&P was down 1.3, the Dow Jones 1.2, and the QQQ, which is the NASDAQ, was down 1.75. So a red day for stocks in general. And then in my case, a red week. It was, last week it was 80,000 something, and now it's at, I think it got as low as 78,000. Um, my account did, but um, let's go over what the activity was for the week. So, if this is your first time looking at any of my videos, I got two portfolios that I invest in, and these two portfolios make up that entire M1 net worth you just saw. So the first one I'll go over is this one called High Dividend. Let's open this up. So here we see, let's switch this to the 1 week. All right, so here we see the portfolio is down 2.5% from a week ago, and then you see that it's made up of all these individual stocks. So 3M is down 5%, 5.4% from last week. And then these little arrows right here that you see, that means I got a buy order for tomorrow. So the stock kept going down. So I said, why not? I'll pick up another share. I'll probably keep doing that until I reach probably no more than 25% here on the percentage of the portfolio. So right now it's at 22.5. So once it reaches 25, I'll probably stop investing into it. But up next we got Old Republic International down 3.6, followed by Home Depot 3.5, Warner Brothers 3.1, T Rowe same thing, Cisco just under 3%, same thing with Coca-Cola, American Financial Group 2.6, Procter Gamble 2.5, Johnson & Johnson 2.3, WPC 2%, Moultria 1.8, AT&T 1.6, Lockheed Martin 1.2, Citigroup 0.89, Best Buy 0.6, and then these three stocks were up this past week. HPQ up 1.59%, Costco 2%, and Walgreens 6.72%. And in these updates, I'll go over the activity. Any buys or sells that I've done, I'll go over it. So last week was the 25th. So from the 26th on, all right. So it looks like on the 27th, I had a buy for 3M. So this is going to make up those $300 that you see in the title that I put to work. I picked up just over a share. Like I said, it kept dropping, so I kept buying into it. And then we got T Rowe, a dividend from T Rowe and Coca-Cola, $15 each. That was about $30 right there. And then this morning earlier, I had another buy order. Like I said, it kept going down, so I decided to pick up another share. And I got this one for just under $90 at $89.52. So that's about $184 into 3M this past week. And then that other portfolio is this one, the 2030 aggressive. Let's take a look at this one. Now, this one is my more passive investment. So this 2030 aggressive pie, it's an expert pie offered through M1 Finance. And it's mainly just a bunch of ETFs through Vanguard, a couple others, but mainly ETFs. I think they're actually all ETFs, if I'm not mistaken. But there's a bunch of ETFs, and like I said, this is my more passive side, so I don't really look at what it's investing. You can see here I've allocated 99% of the funds to go to this pie. I still haven't decided what I'm going to do with this position in Apple, whether I'll just keep it or sell out of it. I want to do my analysis of Apple and see if it's worth keeping or if it's something I should sell off. So I haven't done that research yet, so I'm not gonna sell out of it. But As far as activity goes in this one, I usually just deposit. Right now I'm doing increments of $25 every day. So if we look on the 26th, there's $25 there, $25 on the 27th. There was $50 on the 2nd, probably because I missed a day. So 25, that's about $100 there. And then we got some dividends, one for $6, another for $11, and another $25 in an ETF spot this morning. So that's 125 for the 5 days of the week. So that was it for my portfolios. And now I want to just talk about real quick some text, some word that I came across from Peter Lynch in his book, One Up on, no, actually, sorry, not in his book, One Up on Wall Street, his book, Beating the Street. So let me pull that up now. So here's the picture I took of the actual book, and then I was able to highlight this with my phone. But this is Beating the Street, page 115. So he says, bargains are the holy grail of the true stock picker. The fact that 10 to 30% of our net worth is lost in a market sell-off is of little consequence. We see the latest correction not as a disaster, but as an opportunity to acquire more shares at low prices. This is how great fortunes are made over time. Now, are we at the start of a bear market? I don't know. Nobody really knows. So I think that's why it's important to invest in businesses that are good businesses, and when the stock prices do go down, to keep investing into them, because like Peter Lynch says, this is how great fortunes are made over time. So you're not going to make a great fortune in one day or in 1 week. You may with some, but that's not really something you should expect. And like he talks, or like he says here, we see the latest correction as a disaster, but as an opportunity to acquire more shares at low prices. So if we do enter into a recession or a bear market, you should look at this as a golden opportunity for you to be investing in the companies that you like at lower prices, because you may never see these prices again or for a very long time. So, and this bear market, I'm not saying that we are in a bear market, but if we do go into one, it may last for several years. There's no way to know for sure. Things can happen from now until next year, and from now until the next 6 months or so. But we just don't know. And I haven't even lost that much of my. So if we go back to my portfolio, I haven't lost that much. If we go to the all-time performance, for this one, I'm still up, nearly 70%, 16.5. And if we go to the other one, I'm actually down, I think 5%. So 5.5%. So I'm not even down 10 to 30% yet. But if I do get there, it's not something that I'm gonna spaz out and sell all my shares and sell all my stocks, because I think that the market's gonna go to zero. That's not what I intend to do, and that's not what I'm going to do. Now, if there's businesses that I've invested in that aren't good businesses, I'll sell out of those. But I'm not gonna sell just for fear of the stock market going to zero. And that's not something I would recommend anybody do. But those are my 2 cents. Let me know what you guys think. And I actually recorded the analysis for 3M, but it was too long, man. It was like 30 minutes, so I'll probably cut it up into 3 parts and then upload the videos like that, because 30 minutes is a long time, so I don't want to make the videos that long. This one's already running at like 9 minutes, so I'll end it here. But if you got any questions, let me know, and I'll see you guys next week.